Welcome back, everybody, to Volatility Trading Strategies and another Volatility Lingo video. So this one's a continuation of the last one that we did, where I was talking about percentiles and how useful it is for traders to be able to divide things up into sections to get a better view of where the common ranges are. The example I used was this one, where we can divide the VIX index data for the last 35 years into percentiles, in this case 10% deciles, to get a much better view of where those values fall. So a VIX index, for example, of 18, is that high? Is it low? On its own, that's just a nominal value that doesn't tell us very much. And certainly in the last year or two, a VIX of 18 is in the low range. It's quite regularly been above that. But when we organize all the data into percentiles, we can easily see that a VIX of 18 is the 50th percentile, meaning 50% of all values going back to 1986 were lower than 18, and 50% of all values were above 18. Now we're ranking things on a relative scale, and it's a whole lot more valuable. A VIX of 15 is the 30th percentile, etc. So in this second video, we're going to look at percentiles in a slightly different way. We're going to be doing percentile rank of individual values, and those can also be very useful for traders to be getting better signals. And really quick, if you want to go far beyond these basic terms and actually see my live trades and follow my real portfolio, there's a no obligation free trial on my website you can claim anytime. You'll see firsthand if the VTS community is right for your long-term investing goals. Alright, so I'm going to use an example with the VIX Futures and shorting volatility ETPs like VXX and uvxy in a minute, but first let's just define what we're talking about here. Percentile rank helps us determine where an observation ranks in relation to itself over time. It tells us what percentage of all historical values the current value exceeds in the dataset. So it's based on a scale going from 0% to 100%. A data point with a 0 percentile rank would mean that it's the lowest value in the history of that dataset. So the VIX index closing at 914 on November 3rd, 2017 was the lowest in history. So that one would have a percentile rank of 0. A data point with a 100 percentile ranking would mean it's the highest value in history of that dataset. And for that one, the highest VIX index reading was a closing value of 8269 on March 16, 2020 during the pandemic. However, if we use the old VXO calculation with the S&P 100, the VXO closed at 150.11 on Black Monday, October 19, 1987. That would be our value with a percent rank of 100. So you can see how this starts to become really valuable information. We're trying to go far beyond just those absolute values and start ranking things in a historical context to help us get much better trade signals. So let me give you an example using the VIX Futures. Remember, you can always get up-to-date values at vixcentral.com, but we know the volatility ETPs like VXX and uvxy, they derive their price entirely based on the changing values of the front 2 months of the VIX Futures that they hold. Now, I've got dozens of articles and videos on this subject, so I'll leave a link for one of those at the top here. But something that you'll often hear said out there on Twitter is that as long as the front 2 month VIX Futures are above 0% or in contango, then that's a good signal to be shorting volatility, and shorting the volatility ETPs like VXX. Now that's something we can easily test, and I will show you that backtest in a minute. But to tie this into the video today, is 0% contango actually high? Is that sufficiently high for us to be shorting volatility? And how will we know? 0% on its own, that is just a nominal value. There's no context there. M1, M2 VIX Futures is one of the metrics we look at in our volatility dashboard, so it is important. But of course there are many other important ones as well. There's a wealth of information in the cash VIX term structure, along with our specialty dashboard with even more specific and useful metrics for traders. But that M1, M2 VIX Futures contango level is something we look at, so let's examine that 0% number a little bit closer. Alright, so this is just a basic spreadsheet with all the VIX Futures values going back to their inception in 2004. And if we want to analyze where that 0% number is, we can just go to the most recent value. I'll just scroll down, apologies for the dizziness. Right here, December 31st, 2021, this is the last value that I have. Now, if we wanted to just do our basic percent rank to try to see where this ranks in history, I can just kind of fake it here, put a 0%, and then use a really basic function. So it's just percent rank, and we're going in this column here. So we're just going to go K3 to K4477, highlights all the numbers, and then, of course, we are interested in this 0% number. So there's the percent rank, 15.8. Remember, with percent rank, that means that 15.8% of values throughout history were lower than the number we're testing for. That 0% line is 15.8%. So if you were to use that as a short volatility signal, that means you're going to be shorting volatility about 84% of the time, which if you've ever looked at a chart of the VXX or the uvxy, you'll know that they do oftentimes spike upward and you wouldn't want to be short vol during those periods. Shorting volatility 84% of the time is an extremely high conviction trade that no doubt will lead to insane drawdowns. Now, if you want to see that, I've got a test here. This is just a very basic binary test above and below 0%. 0% above, we're going to be short the VXX. Below 0%, just move to cash. And this is what that looks like. Now, if you were to have done it for 17 years and just closed your eyes, it would have been a profitable trade. But of course, with drawdowns that reach 81.5%, with several at 60 and 70 and 80% along the way, this is a complete non-starter for anybody doing the short volatility trade. 0% might look like a nice round number, but it's a terrible level to be using. So actually, if we just go back here, we can just do a quick adjustment here. Let's say we make this 6%. Well, now we're talking about a percent rank of 46.6. This would mean that the trader is now short volatility 53% of the time. As with most things in the short vol trade, it's never really about the profit. Many strategies can lead to long-term terminal profit. What we're trying to do is reduce the drawdown so we can actually stay the course and achieve that profit. So what would this do? I've got that test as well, comparing the 6%. 6% being in green, the original diabolical 0% being in blue. And of course, as we can see, the drawdowns have been significantly reduced. Now, lately, of course, it's been a very tough short vol environment, so there's a lot of whipsaw going on here, but there's no doubt that 6% is a much better level than 0%. Now, I would say that there's still very few people who could follow this, which is why you want to look at several other much more important and relevant volatility metrics, including multiple aspects into your trading, but you can see how that percent rank is actually very valuable. The numbers 0 and 6 mean nothing, but percentile rankings of 15.8 and 46.8, they do mean something. So for any current values and any metrics that you do use as input variables for your trading, I would suggest people start viewing those in terms of percentile rank. For M1, M2 VIX Futures, the current value at the time of making this video is 11.67% contango. Now don't look at that value as 11.67%. That's not useful at all, it's just a number. Instead, think of it as contango right now is higher than 83.8% of all values going back to 2004. Now you can structure trades based on the conviction that this is considered a high level of contango. The VIX index minus volley index residual metric is at 4.42. Again, totally meaningless. Unless we also say that it's the 90th percentile rank since inception. Now we know that historically speaking, it's very high. 4.42 means nothing, but 90th percentile really does. VIX minus volley is measuring out-of-the-money options premium. And so for structuring options trades, we'd be better off selling strangles because of the 90th percentile rank and how juicy that out-of-the-money premium is. Versus, say, straddles where the strikes are at the money and a lower premium edge. Or we'd prefer to be selling iron condors with wider wings to target where the premium is, as opposed to an at-the-money butterfly, for example. Knowing the percentile rank of the metric allows us to structure the very best trades we can. The number on its own can't tell us that. Just like price comparisons are irrelevant if you don't also factor in inflation. Or jobs gained and lost over time doesn't mean anything if we don't also adjust for population growth. Well, volatility metrics are the same thing. They don't mean anything if you're just viewing them with nominal values. It's only when we start to factor in percentile rank that gives us the accurate gauge for history, and that allows us to make better trades, and of course long-term just make more money. So if you like videos like this and want to take it a little bit further, remember you can claim your free trial anytime on my website and see if the VTS community is right for your long-term investing goals. Thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.